Welcome back. Today we are launching a really comprehensive analysis into the market year we just got through, the very challenging 2025. It was a year that I think forced pretty much everyone to question some foundational beliefs about the traditional 4-year Bitcoin market cycle.
It really did.
So we need to know, did the cycle truly break, or did it just mutate into something else?
That's the mission today. We're going deep into the data stack from Mo and the Moestradamos Research Team. We need to do almost a forensic audit of 2025. We have to figure out where the cycle's timing technically held true, and we have evidence it did, but more importantly, where it just shockingly diverged.
In terms of performance and sentiment.
Exactly. Performance, momentum, the whole feel of the market, this dichotomy, right? This cycle being on time, but completely out of gas. That's the key to unlocking the outlook for 2026.
Okay, let's unpack that right away then. So if we just look at the simple USD performance, the reality is 2025 was a pretty brutal year for long-term holders. After the halving in 2024, everyone expected this massive explosive run. That just didn't happen. Bitcoin finished the year down about 6%.
It was a red candle, plain and simple, and that is what fueled this, this ubiquitous narrative that the 4-year cycle is now completely broken, obsolete.
Right.
And if you look strictly at performance, you can see why. Based on the research from Mo and the Moestradamos Research Team, this was technically the first full red candle in a post-halving year.
The very first one.
Yep. I mean, we have to set aside 2010, of course. That was a statistical outlier. The market was brand new. It went up something like 43,000%.
Okay, so a completely different animal. So a negative year felt like, to many people, the definitive sign that the blueprint had failed.
It did. But here's the critical distinction we have to make, and the research from the team really lets us do this. We have to separate the performance failure from the timing structure.
What do you mean by that?
Well, even though the annual performance was, so disappointing, the technical market topped the highest price peak against the US dollar. It still happened in the fourth quarter, Q4 of the post-halving year.
Which is exactly when it was supposed to happen, historically.
Exactly. It's perfectly aligned with prior peaks. So structurally, the cycle's timing held up. The calendar worked, but the cash flow just wasn't there.
This is where we need to spend some time, because this divergence is staggering. If the timing held, why did the outcome fail so miserably? Let's look at the progressive weakening of Q4 returns across the cycles.
This is the key. You can track the deterioration with real precision. So think about Q4 of 2013. The return was, it was astronomical. Plus 421%.
Wow, a completely different era.
A truly retail-driven parabolic blow-off. Then you fast forward to Q4 2017. Performance was still huge, but it was already cut in half, plus 220%.
Still massive, but a clear drop.
A huge drop. Then fast forward again to Q4 2021, and this is the warning sign we all should have taken more seriously. The return just craters to a minimal plus 5%.
Barely a move. And then we get to the absolute collapse in Q4 2025.
Precisely. That quarter, which held the traditional cycle peak timing, saw a dramatic loss of minus 23%.
That progression it's just astonishing. From a 400% gain just a few cycles ago to losing nearly a quarter of its value in the same period.
It's not a minor fluctuation. It suggests a fundamental structural change in how liquidity gets allocated in that critical final 3-month window.
So what does that tell us?
It tells us that the retail momentum, the liquidity needed to push Bitcoin into a true euphoric blow-off top in that final quarter, has just deteriorated cycle after cycle. The institutions might be here, the ETX might be flowing, but the velocity of that final price move has essentially vanished.
So the takeaway for you listening is this. When people debate if the cycle is broken, you have to clarify what part broke. The timing of the Q4 peak against the dollar technically held. But the performance, the expected momentum, that completely collapsed.
And that context is absolutely crucial for how we model 2026.
Okay, so if we connect this collapse of momentum to the rest of the crypto space, especially altcoins, what does that show us?
We find even more evidence of this weakness. The research from Mo and the Moestradamos Research Team noted a continuing, really brutal trend. Altcoins have been systematically dropping against Bitcoin for 4 straight years now.
4 years. It's a trend that should be a huge warning. Let's run the numbers. So in 2022, alts dropped 22% against Bitcoin. 2023 was even worse, down 30%. 2024 saw a 13% drop, and then in 2025, they were down another 14%.
The pattern is just undeniable. So even though Bitcoin itself itself had a red year in 2025. Just sticking with Bitcoin resulted in dramatically better performance than trying to pick winners in the altcoin casino.
Which brings us to this idea of the apathy top. The research suggests the lack of that final euphoric rotation into alts. It was because the market topped on deep apathy, not euphoria. What does that mean in practice?
It means the driver for that lack of excitement was probably the macro environment, specifically the higher for longer monetary policy.
Right, high interest rates.
Exactly. When rates are high and liquidity is tight, the super high-risk speculative capital that fuels those massive altcoin rallies, it just stays on the sidelines. It prevents social interest from reaching that fever pitch we saw in 2017 or early 2021. The market just ran out of retail fuel.
So instead of a dramatic fireworks-filled peak, we just got quiet exhaustion. And we can see this reflected in the technicals too, right?
Absolutely. If you look at the Weekly Relative Strength Index, the RSI, it tells a classic story of declining momentum. The price itself made higher highs, which confirms the peak timing, but the weekly RSI was making lower highs.
A bearish divergence.
A classic bearish divergence. It's a huge warning sign that the internal strength of the market is weakening. It means fewer people are buying with conviction at higher and higher prices.
Yeah. And what's really fascinating here is that this setup is technically very similar to what Mo and the Moestradamos Research Team observed back in 2021 going into 2022.
It's eerily similar. That final high on the weekly RSI in the last cycle was around 68 to 69. This cycle, the final high was almost identical, around 70. The technical warning signs were there, confirming the enthusiasm was already fading before the price actually peaked.
Now we have to address what I think is maybe the most challenging part of this whole deep dive. We've been talking about everything in US dollar terms.
And that's a problem. Valuing Bitcoin against the US dollar is inherently complicated. The issue is structural. The purchasing power of the dollar is, it's asymptotically going to zero because of constant money printing and inflation.
It's a failing benchmark.
It's designed to fail over a long enough timeline. So measuring Bitcoin against it only gives you part of the picture. To get a clear view, we have to look at hard assets.
So where do we start?
Let's start with stocks, the S&P 500. When you measure Bitcoin against the S&P, the analysis shows it actually topped much earlier, in July 2025.
July, so that's what, 5 or 6 months earlier than the dollar top?
That's right. And it's significant because this is the second cycle in a row that this has happened. Last cycle, the April 2021 high was higher against stocks than the November 2021 high was. It's a pattern.
Okay, so Bitcoin is peaking earlier relative to other risk assets. But now for the crucial one, the paradigm-shifting measurement against gold.
This is where it gets really mind-bending. When you value Bitcoin against gold, our research shows that it actually topped in December of 2024.
December 2024.
Yes. Think about that for a second. That's a full year earlier than the USD top in Q4 of 2025. A divergence of that size is massive. It fundamentally challenges the whole idea that the post-halving year is the time to look for the top.
How does that compare to history?
It's a huge anomaly. In 2017, it topped against gold in December of the post-halving year. In 2021, November of the post-halving year, the timings were close.
But this cycle, it was before the post-halving year even really got going.
Correct. The true timing of the top is clearly dependent on your denominator. The smart money, the real value-preserving money, might have been rotating out almost a year before the USD price finally peaked. That USD peak was maybe more of a liquidity trap than a true climax.
So to summarize this for you, the cycle timing against the devaluing dollar technically held, but against hard assets like gold, the top arrived nearly a full year early. This is probably the most important finding we've discussed.
I agree.
So as we move into 2026, we're in the midterm year. Historically, the research from Mo and the Moestradamos Research Team suggests these years are often great times to buy, especially mid to late in the year.
That's right. But we need to manage expectations. The base case analysis suggests that because we topped on apathy, not euphoria, the decline has been more muted, more of a grind.
So the current price action tracks closest to the 2019 bear market.
It does. That suggests a continuation of this pattern. We might see some rallies, but probably without enough momentum to be sustained. It's a grind.
Okay, a grind it is.
Yeah.
So what are the key levels we should be watching in 2026?
The research highlights 3 crucial pivot points. First, the yearly open. Bitcoin started the year just below $90,000. That price point is highly likely to act as a major pivot and future resistance.
And we've seen that before, right?
Yeah.
The 2018 yearly open was resistance in 2019.
Exactly. The 2022 yearly open acted as stiff resistance in the rally after that.
Yeah.
It's the point where late buyers from the peak finally get a chance to break even and they sell.
Got it. What's the second level to watch?
The 50-week moving average, the 50-week MA. It's a common target for these counter-trend rallies in a bear market. We saw tests of it in March 2022 and July 2018. If a strong relief rally happens, that's a natural technical ceiling.
And this is a big but. It's not a guarantee we even get there.
That's the crucial caveat. We have to remember that in 2014, for instance, Bitcoin didn't make it back to the 50-week MA until the bear market was completely over. Given the lack of momentum in 2025, that's a real risk this time, too.
And the final point, the floor.
Mo and the Moestradamos Research Team think it's likely that sweeping the previous low comes into play at some point in 2026. It's standard bear market behavior to go hunt for that liquidity sitting below the last major low.
So overall, the expectation should be for more of this muted decline until we see a real shift in global monetary policy.
That's the base case.
Okay, so this deep dive has been incredibly clarifying. To synthesize the most powerful findings for you, two things really stand out.
First, the dramatic deterioration of the Q4 post-halving performance, a collapse from a 421% gain to a 23% loss. That shows a seismic shift in market liquidity. The fireworks are gone.
And second, that massive full-year divergence in topping behavior when you measure Bitcoin against gold versus the US dollar. The choice of denominator changes the entire narrative of when the top actually happened.
And that brings us back to what's relevant for you. History suggests these midterm years, like 2026, are for accumulation. Sticking around during the grind, doing the homework, that's how the people who made the most money in the next bull market position themselves.
Patience is key when the market is apathetic.
Absolutely.
So as we look at this early top against gold, but a later one against the dollar, this divergence raises a profound question for all of us. In a world of infinite currency debasement, should we be increasingly measuring Bitcoin's true performance against hard assets like gold, instead of just the continuously devaluing US dollar? Something to mull over as we head into 2026.
Indeed.
If you want to continue the conversation and stay updated on Bitcoin and the broader Bitcoin ecosystem, check out the Discord link in the description or on the channel, where Mo will be sharing ongoing research, insights, and updates. We'll see you next time on Inside Bitcoin.